We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you, they connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to NotYourAdvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.
Welcome back. Happy Friday. It's Not Your Advisor with NYU Grad on April 11th. Let's jump into today's session and wrap up the week. It's all about tariffs and currency wars. If I had to sum it up, gold won today, and Monday's low must hold. I do have a lot of macro things to cover after I cover breadth, but let's jump into the breadth numbers. On the NYSE, we had 97 new highs versus 354 new lows. 74% advancing versus 24% declining, 88% below its 50-day, and 83% below its 200-day moving average. All indices closed green for the day. All of the mega caps and most of the Mag 7 cooperated. So looking at Mag 7, Microsoft was up 1.8%. NVIDIA was up 3.1%, Apple 4%, Amazon 2%, Google 2.5%, Tesla break-even day down marginally 0.04%, and Meta was down 0.5%, so not too bad. JP Morgan reported was all over the map. They were up, down, but they closed up. Looking at the one-day performance at sectors, all green. Leading to the upside was not tech on the daily performance. It was basic materials up 3.6%, energy up 2.9%, tech 2.3%, healthcare was up 2%, financials were up 1.8%, industrials 1.7%, utilities 1.5%, consumer defensive 1.4%, consumer cyclical 1.3%, real estate 1.2%, and communication services 1.1%. For the 1 week performance, tech did lead. It was up 8.8%. Basic materials for the week was up 6.6%. Industrials 5.8%. Communication services 5.6%. Financials 4.8%. Consumer defensive was even up 3.5%. Leading to the downside for the week was real estate down 1% and energy down 0.61%. So those are the quantitative numbers. We lived through a very historic week this week. We saw the second largest NASDAQ gain ever and just a lot of volatility. But I wanted to kind of paint the picture of what's going on macro level. So, first things first. On Wednesday, I noted that we had a follow-through day. And it was 1 day early, but it counts. So what that basically means, if you review Wednesday's podcast, Monday's low should hold for a little while. Now, if you missed Wednesday's podcast and you don't have time, I'm going to post in the show notes the definition of a follow-through day. Weinstein developed this, and IBD, or Investor Business Daily, adopted this. But basically, we have a shot at a new bull market. Now, I want to caveat that. I want you to listen very carefully and take notes if you must. Every bull market started with a follow-through day. 100% of them. And we had a follow-through day this week. However, not every follow-through day led to a bull market. You got it? So I'm going to use an analogy that my buddies that own exotic cars would appreciate and probably get a chuckle out of this. It's like saying everyone who owns a Lamborghini is a douchebag. 100%. But not every douchebag owns a Lamborghini. Does that make sense? So we have the ingredients to potentially be in a new bull. We're going to go to new highs. It's potentially there. But doesn't mean it definitely will happen. So I put the definition of green light for that follow-through day in the show notes. Who am I kidding? This is all going to be about the tariffs and macro news because this whole week was jawboning from both Trump, other politicians in other countries, as well as the Fed. So just to give you a sampling, Trump today said he is optimistic China will seek a deal with the U.S. However, on the other side of the Pacific, the Commerce Ministry in China, quote, even if the U.S. continues to impose higher tariffs, it will no longer make economic sense and will become a joke in the history of the world economy, end quote. So they basically said if the U.S. increases the tariffs on China to 180, 200, 300, 400%, 1,000%, they're just going to ignore it. And the last retaliatory act was China raised their tariffs on U.S. goods heading over there, if those exist, from 84% to 125%. So that doesn't sound to me like this is over and that they're going to go have a slice of pizza somewhere and be friendly, or a bowl of noodles. So I suspect more volatility. It wouldn't surprise me if we see in the news that China and potentially other countries start to sell, or continue, I should say continue, not start, because that already started, continue to sell U.S. treasuries to weaken the U.S. dollar and make the U.S. and Trump think twice about tariffs. So I want to kind of fast forward a little bit here, and I'm going to give you like the simpleton summary of what this whole tariff business and what potentially is happening with the treasury markets. So in simple terms, other countries buy our bonds. So Japan and the EU individually have about $1 trillion of U.S. treasuries. Then the third place is China at $750 billion. The simple way to think about this is we have agreed to, in the U.S., agreed to ship all of our jobs elsewhere. These countries agree to buy our treasury debt, giving us a loan, right? They buy our U.S. treasuries, we get their money, and we owe them back principal and interest, right? We then take that money and fund our military, our social security system, etc. So what about the U.S.? Because the U.S. buys a lot too. So the government can't buy their own bonds. They use other entities like the Federal Reserve. So that's the macro picture. So there was a story that I will link by another Substacker named Dean Blundell. I don't know who he is, and I don't know the source because in the story he states that Mark Carney, the Prime Minister of Canada, went on a James Bond-esque type tour to Europe to talk to their leadership, and Japan was in the room, and they all orchestrated a steady sale of U.S. treasuries, and that caused panic, That caught the attention of the U.S., that caught the attention of Trump. Trump even talked about that he was watching treasuries overnight and forced the hand to back down from the tariffs. Now, I don't know the writer, Dean Blundell, or his source. I don't know how he knows if Mark Carney actually did go meet with Europe and Japan. But even if that did not happen, some few entities were selling U.S. Treasuries. So no matter who it was, this leads into my theory being correct that when other countries are tired of the U.S. dollar being the bully in the playground, that they would eventually start using this leverage and sell U.S. Treasuries. People thought I was crazy because why would you sell Treasuries? It would make the actual asset fall in value and you're cutting your own throat. It's because their local home economies have mouths to feed, have wallets to buy things, and they're the ones that are making the things. So all of the stuff that's being made in China can be purchased by Chinese consumers if they allow their currency and they support their own currency. At the same time, if everyone starts selling U.S. Treasuries, just like the Fed said today, the Fed reported, absolutely, we are ready to stabilize the market if needed, per the Financial Times. What does that mean? Let me translate that for you. They only have a few tools in their toolbox. They can either cut rates, raise rates, or monetize the currency. Cutting rates is not going to help much in this situation. So what this tells me is what the Fed is basically saying is, if someone sells U.S. Treasuries, we will buy it. Meaning like Canada, EU, China, Japan. But if no one buys U.S. Treasuries, we'll buy those too. So let's just say hypothetically, every country stops buying. And every country, like big ones, China, Japan, EU, Canada, starts selling U.S. Treasuries, then the Fed has to be the buyer of last resort. They have to print money to buy those treasury, thus debasing our currency in the U.S. Then the U.S. dollar collapses. This is economic war. In history, this has always led to a real war. So this is something that you all need to be mindful of. It's not going to happen overnight. It might take 4 or 5 years to percolate and simmer. But you'll see flashpoints like eventually if Taiwan ever gets invaded, or not invaded, but there's conflict in Taiwan with China going in trying to take it. So let's keep peeling this onion. I'm sorry for the rant or the sidebar, but you have to know the macro. That's the forest versus the trees. So we had a big bounce to finish the week. Gold and gold miners are up big. Technically speaking, we should go higher, but there are a lot of black swans still circling around the lake. Apple, JP Morgan, Nvidia really carried the weight of the Mag 7 and Dow 30 names. What else stood out to me? In the profitable companies in the NASDAQ that made a new high, there was only one company. And I won't give the ticker out to everyone, but it is available to the paying subscribers. But I'll give you a clue. It is a packaged goods chicken nugget company. That's right. That's the company that made the new high list on profitable NASDAQ. So let's keep going here. What was strong in the S&P and the NASDAQ? I'm not going to go cover everything, but you had Monolithic Power up 9.9, Newmont Mining 7.9, Huntington Ingalls up 7.3, Moderna 6.9, Mosaic 6.6, In the NASDAQ, you had MicroStrategy up 10.1, Fastenal 6.4, Broadcom 5.5, Applied Materials 4.8, Apple 4.06, Take-Two Interactive 3.7. To the downside, you had Texas Instruments down 5.7, Aptiv 3, Old Dominion Freight 2.8. In the NASDAQ, you had AppLovin down 5.2. Let's switch over to macro as well as the best defended. That's my train.
Stand clear of the closing doors, please.